Okay, so look, it's just gone 11:03, so let's kick off. So thanks very much to everyone for joining. This is our fourth broker support webinar in the series since we kicked it off during the lockdown restrictions. As I said, would welcome any feedback you have, as I said, after the event, or indeed, as I said, throughout the event. If you want to use the chat box there, happy to answer any questions throughout. We will be hosting a Q&A session at the end, but as I said, thanks to everyone for joining so far. So without further ado, just to move on, just to give you an outline of today's agenda, I'm just going to give a brief overview of the market and what we've experienced over the last number of weeks. I'll give you an update as well in terms of the business pulse, thanks to Bank of Ireland's recent, obviously, and monthly business pulse, which, as I said, goes into detail around the industry trends and indeed what's being noticed from a consumer and a business confidence perspective month to month. We'll have a discussion around our funding and criteria update in light of the changes that are ongoing with post-COVID new normal world. Also, we will have a chat around our merchant cash advance offering, which we feel will add significant value in the retail and hospitality trade. As I said, we will then also have a discussion around the partnership portal enhancement and some useful news links as well on what has been in the news in recent weeks and days. And then we'll have a brief Q&A session at the end as well. Okay, so I suppose just to kick off, I suppose June saw a marked improvement both in consumer business confidence. This was very much evident, with outbound calls and inbound calls that we received from SMEs, and indeed, was reflected, I think, in consumer confidence with the relaxation of a number of the restrictions that were imposed by government. I suppose most notably, we saw increased demand in the construction sector for quite a lot of cash flow and working capital facilities, and this was reflected in our lending volumes in this sector throughout June. Also, I suppose the increased demand for SME credit was definitely evident as well, whereby people were coming out of lockdown. I think from the 18th of May onwards, we experienced, especially in the construction side of things, a huge uptick in our services due to our speed and efficiency of deploying capital. For the first time in a number of months, we deployed a number of six-figure loans, which again will give confidence back to you as intermediaries, I would hope, to show that our institutional partners were supporting us and indeed supporting a number of our clients throughout June. And this was the first time that this was evident since early March. So again, a very positive, change in fortunes for, the funding that was available to our SMEs. It was our busiest month since February in terms of application and loan inquiries, both from an organic and indeed an intermediary capacity. Again, I would signify this as a step in the right direction. In my capacity as head of partnerships last year, as some of you would be aware, I would always track, activity on the intermediary side as a fair reflection of what's happening in the market. And I think in June, like every industry, brokers and indeed intermediaries were impacted by maybe a lack of demand for their services throughout the last 3 months. However, we definitely noticed a great uptake in loan applications coming through intermediaries. Our approval rates have hovered around the 40% mark for the month of June, significantly up, probably again since pre-COVID levels. Obviously, to give you an idea, 4 in 10 applications are being approved, but I suppose quality does remain an issue. And by this, what I mean is that, we are seeing quite a lot of, generic applications coming in, and, poor quality businesses that unfortunately were struggling pre-COVID, throughout COVID have suffered yet again. And, in the post-COVID world, they will, struggle to attain finance, especially from, non-bank lenders and indeed possibly their own banks. So, we have seen quite a lot of, people that are looking to, attain finance in that category. The forbearance measures, which we introduced to assist our clients throughout COVID-19, thankfully is subsiding. Over 50% of our clients who took forbearance, which was essentially a 3-month repayment holiday up until the 1st of July, are now back on a full capital and interest repayment schedule with us. So again, yet more confidence for us, and indeed for the market, and indeed for you guys in the intermediary space, to show that, look, people are returning to full capital and interest, and indeed most of those clients, we're happy to look at new facilities for them if they should require them for working capital or cash flow for their business as they open back up. But of course, there is a small cohort of people that are still struggling, maybe haven't returned to levels that they would find comfort in terms of getting back to full repayments with us. And Colin Barry and his team in credit there are more than happy to obviously to explore extensions of that if needs be, provided that a full, due diligence and disclosure of bank statements and that is provided, because as you can appreciate, repayment holidays are done on a case-by-case basis. There is actually people who have performed exceptionally well during lockdown, and as I said, maybe we weren't aware of perhaps their position pre-COVID, which we were happy to facilitate forbearance. But yet, throughout COVID, they have performed well. So we're trying to ensure that those people that can pay will pay and return to Flender on full capital and interest repayments. The increased appetite from our main institutional funders for higher ticket loans has returned. I'm happy to say that ticket sizes in excess of €100,000, and indeed, as I said, for the first time in a number of months, is back on the agenda. We did have to introduce lending caps, as some of you would have been aware, throughout the lockdown for a number of factors. However, we're happy to say that we do have appetite again from our institutional partners to return to the higher ticket loans. The bounce back loan scheme, essentially, which we are labelling it as, is focusing on our merchant cash advance facility. And again, in the retail and hospitality sectors, we find that this would be a very suitable product for people in this space. So again, looking at people's card turnover on their terminal machines in their business, and I suppose, looking to offer, liquidity and cash flow injections there to people that are seeking, I suppose, an injection of liquidity into their business to allow them to get back to some sort of normality. We are offering, as I said, bespoke lending solutions on a case-by-case basis. So I suppose while we are returning to some sort of normality, we are, ideally trying to, focus on, each client individually, looking at their pre and post-COVID scenarios. Obviously, projections as well is very much important as well for any potential clients looking for funding at this moment. And I suppose a common trend that I would have noticed, and indeed my team would have noticed throughout COVID, is quite a lot of businesses have pivoted quite successfully to either online trading or indeed click and collect, and revenues have, while they have been impacted, have returned to perhaps 50 or 60% of normal levels, which, for us, determining that on an MCA facility, perhaps for a takeaway or a shop or perhaps a restaurant or cafe, we can look at the level of turnover during COVID, pre-COVID, and indeed in a post-COVID world, and try and, I suppose, build a relationship with them early, and that we can obviously support them from a working capital perspective throughout the next number of months. Again, just to emphasize as well, we're trying to support those with specific liquidity and cash flow issues, and we are not trying to support those that are looking to speculate in the market. I would make this bluntly clear. I think we've noticed quite a lot of people looking to take advantage of the COVID-19 situation for various different measures and for various different stock and perhaps products. And I'd like to go on record to say that Flender are not supporting those people that are looking to take advantage of that. We're here to support those most in need of working capital and cash flow funding, and that is our mantra moving forward as things progress and improve. I suppose just a very quick synopsis. Some of you might be aware of the Bank of Ireland Economic Pulse that's, I suppose, announced each month at the end of each month. And, I've tracked this quite closely over the last couple of months since COVID-19 has, I suppose, kicked in. But, I think from a point of view of looking at it from top level down, it shows a huge increase in demand and a huge increase in confidence in the industry, services, retail, and it's especially in the construction sector where you see, business activity up 81% on the previous month, and up 5 basis points from the month of May. And again, this is probably reflected in Flender's figures in terms of loan applications coming from the construction space. The retail sector, as you can see, obviously up 11 basis points, again with the ease of lockdown measures and the relaxation of certain, measures such as the 2 metre versus 1 metre rule, pubs and bars being allowed to open up. We have seen, and this is evident that retail sector has seen an increase in confidence and activity over the last number of weeks. And I suspect that if we're sitting here in a month's time, that I think July's figures will be in one direction and one direction only, which will be northwards of that yet again. Also interesting to see as well, order books, as you can see there in the industry, services and the construction sector, all up, albeit the construction sector is slightly back with 1 basis point, but nevertheless in the industry and services sector, order books for demand for stock and services has increased dramatically, which is again, a very, very positive trend. And, as most of you are aware, Flender are more than happy to assist from a stocking perspective for many SMEs. So, if there is anyone on your portfolio or in your client list that maybe is looking to take stock at this moment in time, we're more than happy to support them there. And then, in terms of selling prices, evidence that there will be probably an increase in costs for many businesses. So this will obviously reflect into the selling prices across the various sectors. It's very evident in construction. I think it was well documented last month that while maybe there is an expectation that house prices may fall, with industry experts signaling the opposite, I think it will bode well for maybe subcontractors, construction companies, and indeed everybody closely aligned with that space in the coming weeks and months. And I suppose lastly there, the jobs, I suppose category, thankfully, we've seen, a lot of people lose their jobs in recent months. Many people put on furlough, and various different, perhaps cutbacks in terms of spend and indeed employment categories. But thankfully, for the first time in 3 months, and having tracked this, these are all up across the various different sectors. So again, bodes well from a business economic pulse perspective for Flender and indeed hopefully for many of your clients going forward. And what I would suggest as well is if you take a look as well on the consumer pulse, it showed a 4 basis points increase in May results as well. So again, this bodes well, I think, going forward for us all in that category. So I suppose moving on then to, our own funding and criteria update. I suppose happy to say that, June figures were, a world apart from May and April. This was down to a number of factors, obviously, with confidence and indeed our institutional partners coming back in to support us, but also demand increasing. But nevertheless, we are happy to provide specialist COVID-19 working capital. So this is still being offered in a range of between 10 and 50k for any businesses that require it. Our loan facilities, while capped at certain thresholds throughout COVID, we're now happy to say that we're in a position to extend up to 6 figures on this at this moment in time. So as I said, if there is any clients of yours that are looking for perhaps higher ticket loans, we're more than happy to extend that to them. Bounce back loan applications, we have labelled it in this category. This focuses again on the retail and hospitality sector, and in the merchant cash advance facility. So again, in the next few slides, I'll go into more detail around that and how that looks. Terms, again, were restricted during COVID-19, but we're now happy to say that we're back to lending up to 36 months. So again, from an affordability perspective, it does allow some of your clients to have an element of flexibility in terms of repayment capacity there with our credit assessment piece. So, more than happy to look at the longer term lending yet again, which was up from previous of 18 and 24 months. New rates, as I said, our rates still remain at a base rate of 6.25, and we adopt a price to risk philosophy, as I'm sure most of you are aware, and we have a new blended rate option for larger ticket loans available, and unfortunately, like everything, money markets over the last number of months have gone one way and one way only, and that's in the more expensive category, but yet we're happy to work on a case-by-case basis with some of your clients, whether it's for a small ticket or indeed a larger ticket, and we will be offering in some circumstances 2 to 3 options that can be put forward to your clients, and hopefully if one of those scenarios meets their requirements, we are happy to facilitate that within 24, 48, 72 hours, depending on what level of funding is required. Approvals, some of you might be aware we've offered approvals on the MCA product pre-COVID or indeed during COVID, and we're happy now to extend approvals to the retail and hospitality sector, such as hairdressers, bars, restaurants from this month onwards. I'm happy to say we've done a number of these in recent days for 1 or 2 hairdressers locally based here in Dublin, and we would love to see perhaps some more of those sectors coming in from a point of view of assessment for our credit team. And last but not least, both public and private funding is now available. I know this has cropped up with many of you guys question over the last few weeks, but I'm happy to say that if there is sensitivities attached to any of your clients, that Flender are more than happy to facilitate private funding for some of your clients, and it is on a case-by-case basis as well, of course. Application criteria, again, nothing much has changed here, albeit that in order for us to fairly and accurately assess your clients, 6 months bank statements, as you can appreciate, does not probably give a fair reflection in terms of a company performance. So we have extended this out to a 12-month request. Obviously, we will still accept 6 months, but from a fairness point of view, we would request 12 months in order for us to give a fair and accurate assumption of what was happening in their business pre-COVID, and what level of turnover was going through the bank account before March 2020. Tax clearance cert, the usual. Last 2 years, company unabridged filed accounts, management accounts, or indeed draft 2019 accounts are always welcome if the full accounts aren't available. And then I suppose, like everything else, any supporting documentation like a debtors creditors book, strong contracts in place with any blue chip companies or perhaps clients that they're working with are always welcome. And indeed, on the MCA side, if they are operating online or do have terminal machines in their business, like a filling station or a shop, we would request the last 12 months merchant cash advance statements there in order for us to assess them on the MCA product. And again, to outline, we have a little bit more risk appetite on the MCA product due to the element of security that is attached to it. So while it mightn't be a fit on the term lending side, we would hope that an MCA category, if it is in a certain sector and they do have terminal machines in their business, that we would be happy to extend a facility for them on that. And then finally, obviously, outline purpose of funding and what they've done pre and post COVID, or indeed during COVID. So as I said, this week we would have had a number of businesses that have got approvals on MCA and are just back open, and we were extending small kind of 10, 12k facilities on that initially, looking to see how the turnover goes over the next few weeks, and then hoping to top them up again with a further facility into August and into September then as well. So moving swiftly on to, I suppose, the hot topic for this month. Some of you may be aware of what merchant cash advance is. Others might be new to this product. However, it is evident that in a post-COVID world, especially in retail and hospitality sector, that this product will be something that we will be aggressively targeting in the marketplace. With a merchant cash advance facility, it is specifically suited to people in these sectors where, as I said in previous slides, they are reliant on terminal and credit and debit card machines in their business for I suppose takings or daily takings for their business operations. It is plain to see. There was obviously a report last week, I think, by Revolut that I think cashless and cashless and debit card transactions were up over 85% month on month, during COVID-19. So I think for many businesses, the future is, not fully cashless, but nevertheless, I think, online and perhaps, using, tap and pay or pay as you go with this type of transaction is certainly something that, from a point of view of hygiene and indeed from a business etiquette perspective, I think is where many businesses are pivoting to. So I suppose for our opportunity in the market we see is that with merchant cash advance, people that are entering a post-COVID space, such as hairdressers and bars, they will be emphasising the importance to use, obviously cards as cashless payment is the preference for many. And what we are looking at is to try and support businesses with, a small facility initially, working together with them over the course of a number of weeks until their revenues increase. And I suppose the nice thing about merchant cash advance is that, depending on their level of turnover per day or per week, the repayments actually reflect that. So if somebody has an excellent day with 5k worth of turnover on a Monday, and this dips to 2.5k on a Tuesday, the takings attached to merchant cash advance reflect the daily takings of the business. So, the more you make in a day, the more you pay back to Flender. The less you pay back to Flender. So again, I think this is from a characteristic point of view, is ideally suited to many businesses without, I suppose, the strain of having one monthly repayment at the end of the month and not knowing what lies ahead in terms of the next month or perhaps the next revenue check or indeed the next piece of revenue that they would enter. So we would see that this is a huge product to be promoted in the marketplace over the next few weeks and months. So again, but the borrowing level is based on your average monthly turnover. However, on the short term, we'll be looking at this on a week-by-week basis for certain sectors. You can clear it as early as you like, depending on your level of turnover that suits you. And, as I said, the repayments are made daily at an affordable rate as well to the business. So again, we would love to see some applications on this, perhaps maybe with businesses in your locality over the coming weeks, if that is something that you feel might be of interest to them. Then I suppose in terms of how it works, so as I said, again, going back to Flender's flexibility, it is in our tagline, there's no set repayments. So we work off, a basis that when your sales are lower, you pay less to Flender. When sales are higher, you pay more to Flender. And then it's paid on a daily basis through the card terminal as a set percentage. And on average, this would vary between 10 and 15% of daily turnover through the terminal machines. And then obviously, because we don't take any fixed repayments, there is a factoring rate built in, which is clearly evident and transparent from the offset once the contract offer is provided to the client in question. So essentially, with many people at this moment in time unaware of how footfall and how confidence will be reflected in their businesses, this I think is a very, very welcome product that we hope will take off in the next few weeks for many sectors. And I suppose just to put in context, we have supported a number of businesses on this in recent months and in recent weeks, and there's a case study there as well for a bar and restaurant based in North Dublin, where we provided a revolving credit facility on a quarterly basis of €40,000, and essentially this has been paid down depending on their turnover, quite quickly, and we're happy then to, I suppose, revolve that credit facility every 3 to 4 months with them, depending on, I suppose, how quickly they can clear it off. And, as I said, as you can appreciate, there is peaks and troughs, around certain times of the year, especially in the seasonality business. But nevertheless, we're more than happy to look at that now across, hairdressers, cafes, bars, restaurants, and retail and hospitality sectors from the next few weeks. And as I said, if you require any more information on that, we'll happily share that with you over the next few days. So moving then on to kind of the partnership portal enhancements. I'm conscious today, I think we have a couple of new brokers on board with us and on the webinar. This is our dedicated partnership portal that we are promoting out in the marketplace. I would encourage you all to register on this if you haven't done so already. We will be trying to emphasize the importance of using this portal going forward due to the back-end APIs that are plugged in to the credit decisioning process. I think the days of attaching documents to email and manually sending and scanning documents is gone. We're no different. We want to emphasize that we are a digital lender. We want to emphasize the importance of using digital for your clients and indeed for yourselves. So what I would encourage you all to do is, if you haven't done so already, is to log on to flender.ie/partnership and sign up today by hitting the sign up button. Very simple. You just put in your first name, last name, password, and indeed your business name or broker name. And as I said, we will then give you access to the many distinct advantages of the partnership portal that it offers. Each, I suppose, partnership portal is personalized to each individual broker or intermediary or business. And we're happy to say that, going forward, with the new broker loan calculator that we've invested, our time and efforts into deploying over the last number of months, you have an option to give quotes to your clients. You have an option to, I suppose, set expectations early for your clients in terms of, what they're looking for. While it does offer up to 60 months at this moment in time, I just want to emphasize that we are restricted at 36 months. However, we are hopeful of having SPCI funding in the next number of months as part of our offering, which I think will be a game changer for Flender. Without disclosing too much information, we are hopeful that in light of the call by the SPCI to invite non-bank lenders to their panel of I suppose, deployers for the various different funds, we are hopeful that Flender will become one of those in the next number of months. So again, having that 36, 48, 60-month option available now is something that we wanted to emphasize. Also, again, going back to one of our core values of transparency, we want to be fully transparent on our fees or charges to you, indeed what you would be conveying to your clients. And as I said, I encourage you all to take a look at that, and we will be educating everybody as well in terms of the various different credit grades. So we have excellent, good, and satisfactory as a guide for pricing on the partnership portal at the moment. And as I said, in the coming weeks and months, we'll be educating everyone around, okay, what do we look for in terms of an excellent credit grading, and what do we look for satisfactory, which again we'll be able to set expectations earlier for some of your clients. And as I said, just to be clear for anyone that hasn't seen it, there's a five-step digital application process. So very straightforward. The director's details are filled out along with the business details. The loan calculator then breaks down the fees and charges for your client. So again, being fully transparent on that. And then the sales checklist then is essentially where you will fill out, the supporting documentation around the client's background, the director background, perhaps some further information on the business in question, where it's located, and what essentially they've done during COVID-19 or indeed post-COVID to actually return to some sort of normality. So again, it is all done online. There's no need to do a manual Word documents or indeed attach emails, and we're encouraging everybody to log on and start using that in the coming weeks. And I suppose just to emphasize as well from a GDPR perspective, this is all covered by GDPR. We have noticed in recent weeks as well from working remotely that quite a lot of applications have found its way into spam folders, or indeed many files have been too large to send by email. So again, just comes back to the digitalization piece that if people use this more regularly. There won't be any issues with SLAs or turnaround times with our credit department on that. And then finally, the documents can be uploaded very seamlessly at the end as part of stage 5. So that is just to give you an idea of how that works. And then, once you log in and you complete a number of applications, there's a personalized dashboard for everybody that is evident on the main screen. And as I said, it can track progress. So in the incomplete and financial documents area, which you will see here, this will move to approved, declined, more information required, or indeed completed. And should any of your clients wish to go again for an application, you can just duplicate this without having to gather the same information yet again from them, and resubmit it to Flender very, very seamlessly. So again, I would just like to emphasize that if you haven't done already, I would encourage you all to log on and have a look at the partnership portal there, again at www.flender.ie/partnership. And I suppose lastly, I won't go into detail here, but I've I suppose included some very useful news links. We've discussed the SME recovery.ie roadmap in the last number of weeks. For anyone new to the webinar, I would encourage you all to log on, take a look at their website. Flender are an advocate and have signed the petition to support the program that the SME Recovery Task Force are providing to the new program for government, and indeed the new government met with them on Tuesday with John Moran as chair. And this is evidence that liquidity is required more than ever in the SME category. And I suppose from our point of view, as a non-bank lender and as a digital lender in the Irish marketplace, we feel with our technology and with our efficiencies that we are better placed than some of the incumbents that are attached to possibly some of the SPCI and working capital funding, capital assistance funding at this moment in time. Again, this week, speaking to many brokers, many clients, still waiting on decisions that have, gone in for assessment either with microfinance, SPCI, or perhaps their own bank. The delays are just getting longer and longer in these institutions. Whereas with Flender, we are looking standing over 24-hour, 48-hour, maybe even 72-hour turnarounds, depending on what level of finance is required. And we are lobbying hard through various different sources, such as the Bank and Payments Federation, the Independent Finance Providers of Ireland Association, and the SME Recovery.ie Task Force to try and emphasise the importance of non-bank lenders such as Flender to get access to these funds by the SPCI to deploy it much quicker in the marketplace. The live statistics, as you would have seen last month that I shared with you, showed that the approval rate for the SPCI Working Capital Assistance Fund is currently at 9.7%. So 9.7% approval rate, which in this current economic climate is deplorable to say the least. So I think it's from many different sectors and from the various bodies and trade associations that I'm supportive of and attending, there is very much a feeling that it's not fit for purpose and it needs to be edited. And if you look at the coronavirus business interruption scheme, the CBILS program in the UK, I think it's hovering around 40 billion sterling that has been deployed to SMEs across the water, and over 10.5 billion this week alone has been deployed by non-banks. And there's a link there for you to actually follow that through and have a read about it. And as I said, I think the sooner it's realised that non-banks and digital lenders are the future, we would hopefully try and support where necessary to deploy that capital to SMEs most in need for it. So that's really it, everyone. Kind of quicker than regular webinar this week. Probably the most positive one we've had, thanks be to God, in comparison to the last three. It is really good to see green shoots of positivity coming into the marketplace, both from SMEs, consumers, and indeed business owners. And look at, I cannot emphasize enough that Flender are here to help. We've remained open for business throughout COVID-19, albeit at a restricted level. But we are hopeful that in the post-COVID world that we're here to assist and provide much needed working capital for your clients. So I suppose without any further ado, if you have any questions, I'm happy to take them now. Thanks a million, guys. Cheers. So any questions? If there isn't any questions, yeah, Alistair, yeah.
Yeah, hi Don. Just in relation to the SBCI, you're saying that we can apply, just so I'm clear on this, we can apply SBCI lending through Flender, is that correct?
No, sorry, maybe that was misinterpreted, but at this
Yeah,
moment,
I did hear that question,
sorry, Flender are not affiliated with the SPCI for their working capital loan scheme. The only institutions that are the are AIB, Bank of Ireland, Ulster, and some other non-banks such as Invoice Discount.
What was your point with the SBCI then? What were you saying?
So they have opened a call for non-banks to apply to them directly to actually get access to these working capital assistance funds and to allow non-banks deploy it much quicker than, say, some of the incumbents. So we have applied to them to get access to that, and we're hopeful that in the coming weeks and months ahead that we will have access to SBCI funding. But as it currently stands, it is only AIB, Bank of Ireland, Ulster Bank that actually have access to that. I'm aware of some other non-banks such as Baby Financial Services and one or two other lenders in the marketplace that have access to it on the trade finance and invoice discounting side. But there is a subcategory of non-banks and digital lenders in the marketplace that haven't been recognised by SBCI previously. And in fairness to them, they've opened a call for arms to see if there is anyone out there that are looking to.
Okay. So what we're saying is that we're applying for recognition there. Is that
correct? Right.
Yeah.
So I suppose we would have been restricted due to various different circumstances around regulation, around the size of our portfolio, and various other maybe issues that might have cropped up from a compliance perspective. But nevertheless, obviously business banking and SME lending is unregulated in this space, and we're hopeful that with the easing of restrictions, which hopefully will come out of the new formation of government, that through the SME Recovery.ie task force and the Independent Finance Providers Association working on our behalf as a trade association, that we will be recognised quicker than than maybe what was previously anticipated. Thanks, Alistair. Anybody else? Any questions? If there's not, I might just prompt one or two, maybe just to give kind of some insights, maybe on the market, if you're okay with that, maybe on what you're noticing. Tommy Boyle, I noticed you there. Any insights, what you've noticed over the last few weeks? Is it reflected maybe in what we've kind of gone through there on the webinar? You're just muted there, Tommy, sorry.
Colin, how you doing? Yeah, yeah. I mean, it's. I know that the things have changed because the economy has reopened a little bit, but nothing has changed really in a lot of regards either. That kind of way in terms of people's capacity as companies to present themselves to get better financing, because the last 4 months have had a devastating effect. So when you're looking at recent trading and then the uncertainty about future trading, that's causing a problem. I also think, and this isn't being negative at all, it's a fact, but I do think that one of the problems is that the loan levels that Flender have are small enough. The terms are relatively high. The payback is not as long as we would like, because it's a 3-year. So when you're trying to present a case, so most of the time, I'm not even looking to go for funding, because I just know they're not going to get it, and that's the frustrating part. And I suppose that's where I'm saying, even though the economy's opening up, like from a lending point of view, we're no further on. It's going to take another 6 months before people feel that they can actually present a case, because if you haven't traded for the last 4 months, you've been seriously impacted, and you're coming out of it now and you're still unsure, and there's so much uncertainty out there. And that's reflected in your, 4 out of 10. I'm even surprised you're doing 4 out of 10. So, that's 60%. Like, there's a hell of a lot more loans getting rejected than not, and there's a hell of a lot more loans that are not even being applied for. So we're still in a very sticky place, or awkward place. There is confidence, but it's not really material in some regards. That's my perspective on it, anyway. That's not being negative about Flender at all. It is what it is. You're in a particular niche, but I prefer chunkier loans over a longer term, and that would be where I'd be. That would be the space I'm in just at the moment.
Yeah, and look at, I mean, it's plain to see that many non-banks in this jurisdiction have had their funding lines completely removed, which has kind of shortened the offering and the options available to many SMEs. Tommy, I'm aware of maybe 2 or 3 non-bank lenders who have zero funding available and haven't lent in quite some time. And it's been one of my former employers in that as well. So I mean, we're trying to emphasise that look, we have funding lines available. It might be a fit for everyone. We're totally appreciate that, but I think what we have put out has helped people, and I think even in June figures, we did more in June than we did in the entirety of April and May put together. So again, that would show that demand for credit in certain industry sectors is back, which wasn't evident there previous. But look at welcome your feedback on that. Thanks again. Michael Sandys, I see you there, Michael. Any feedback from you just in terms of what you're noticing, or is it reflected in kind of what we've presented? Not sure if you can hear us, Michael, that you're still on mute there.
Can you hear me now?
Yes, Michael, thanks.
Yeah, not at all. This is my first Flender one. I've kind of briefly flirted with you before, but it's the first webinar I heard. And certainly I like the digital part of it. We're trying to be digital ourselves, especially with the COVID. We haven't had much choice but to be digital. I would echo what Tommy said there. In theory, there's things have rebounded a bit, and there is a lot more theoretical confidence back, but remains to be seen. Obviously, everyone is terrified of a second wave and another lockdown.
Yes.
And I have, like, one particular guy now is trying to buy a business, and he's humming and hawing about it because it's in the retail trade. What's going to happen if he gets closed down again? So I think confidence is fragile, to put it mildly.
Yeah.
But obviously at a much better level. I think also that there is more cash around than people probably realize, or that you even hear being talked about, because for most companies who have managed to stay open, this the COVID scheme from the government, where they're effectively paying 70 or 80% of a lot of people's wages, they actually have more cash than they probably had a couple of months ago.
Okay. Okay. Interesting. Yeah. No.
COVID scheme is very good. It's very good, because otherwise they'd be on the dole, and it really has kept things together. It's excellent.
Yeah, no, I think if anything, there has been a big rebound in consumer spending. I know from speaking to certain contacts even in the motor trade and that side, car sales are beginning to turn, and I always would have used that as a real economic barometer in terms of how things are going. And that lady I was speaking to said that, look, that their biggest ever months nearly last July in the month of June. So in terms of new car sales, so people, as you said, Michael, have put money to one side, and maybe in the consumer category it maybe is a bit stronger than on the SME side. But look, if you would hope,
I'd agree.
You would hope that if consumers still continue to spend, that will reflect into SMEs, and their turnover levels and confidence will retain and come back to I suppose accessing credit and give us all some I suppose more ability to deploy capital to them.
Yeah, my local pub in Kilmacud, and it's it does a mix of drinks and food. Booked out for the week, can't get a table last night, tonight, or Saturday night.
Very good.
So people do have cash in their pocket, and they are willing to spend at the moment.
Yeah, no, absolutely.
Colin, how you doing? Ken Rooney here. First time joining. Appreciate the invite.
Not at all. Thanks, Ken.
I've just recently come from, obviously, pillar banks and alternative lending. So doing a bit of work for some large retailers, and I'm involved in Chambers Ireland. But I suppose the real concern here is the pressure coming down the tracks in terms of wage subsidy being pulled in August. Banks and landlords and suppliers being very lenient, parking old stuff. So everybody's been very forgiving in that respect, and obviously businesses are opening up now. So there's going to be probably a big demand on cash and that's probably going to really hit home probably August and September, excluding any extra wave coming. So I think the merchant service is an excellent product, but there would be a concern out there that even on invoice discounting, that they haven't seen the real pressure on the SMEs yet, and the revenue are doing free warehousing until the end of the year and 3% next year. So when you stand back, and I do, in terms of the stuff I'm doing for some clients, is they're probably been some have been quite profitable during COVID that have stayed open, because obviously wages are way down. They haven't paid rent. They're getting rent write-offs. So the real key would be is getting understanding where their business is coming back, say when some of these incentives are being pulled, say in the next kind of month or two.
Okay, interesting. Yeah, interesting. And primarily, where are you based, Kenneth? Is it Leinster?
So I'm northeast. A lot of clients in Dublin. I'm a loud man for my sins, but I would have been AIB, head of business bank in northeast. I would have worked in Capital Flow for a couple of years, so part-time. But I've clients in Galway, clients in Cavan, clients in Dublin, South Dublin, a lot in retail. My background is I would have ran retail stuff myself in the past, so I'd be very involved in the retail side of things, and some people, as one of the previous mentioned there, some retails have come out here stronger than they went into it, because online sales have just taken over. I think the digitalization has probably brought us 5 years ahead of where we thought we'd be, so there's been very, very good stories, obviously, and some bad stories in terms of where businesses are, but there is an underlying fear out there, even when ignoring a second relapse, is that wage subsidies being pushed out. I heard Pascal Donoghue yesterday in terms of they're concerned, but pulling that would cause a spike in unemployment, but the government can't continue on paying what it's paying. So it's maybe at certain sectors. I know Chambers of Ireland are lobbying in certain sectors for that to be kept involved, as opposed to blanket. But it's just the unknown in terms of when people are starting looking to get their cash back, and revenue suppliers. So suppliers are generally parking old balances and paying COD. Revenue are parking it all and filing and paying nothing. So it's just when that cash starts to come, it's accessing your facilities in terms of the merchant services, where especially retail is not that much security in the balance sheet, either assets current or fixed. It's stock and or else it's merchant services really that you're able to leverage a bit of cash flow from.
Yeah, no, absolutely. Even one of my colleagues there mentioned during the week that there's a prominent restaurant in South Dublin who have pivoted, to click and collect and delivery, and are looking to remove their actually sit down offering, because their revenues have taken off during COVID. So there is a prime example of a business that has pivoted really successfully, and rather than having floor staff and maybe the costs or the insurance attached to having people eating in, that click and collect and delivery is maybe where they're looking to go to post-COVID. And there's many more examples of that, there really is. So look, as I said, it's...
Well, I definitely covered a business for you. I might link image this afternoon, probably Monday, but I've definitely one or two on the merchant services that I could throw into you and have a look at and see that, and the digitalization thing is excellent. I have to register that myself later on, so I might link in with you just to chat through them before I do anything on them, just to see are they going to tick the box for you. So I might link in with you on Monday.
100%, Kenneth, appreciate that. Okay, guys, I'm going to maybe wrap it up. We're 50 minutes on now at this stage. Conscious people probably have to go back to the job at hand. So look, thanks again for everybody for logging on. Would welcome any feedback on these webinars you may have. Anyone that you wish to share maybe the link to, we will send it to you now, due to the fact that we've recorded this one for the first time. So look, wish you all well. Have a nice weekend, and we're at the end of a phone if you need us for anything. Thanks a million. Take care.